All right, what's going on, family? Welcome to another live New York session. It is October 20th, 2021, and we're on Forex Factory, so we're going to check the news, see what's ahead of us for today. Now, in the London session, the British pound was under some major news, but the London session is officially over, and the New York session is about to be starting soon. So we're not going to trade that. Now at 8:30, the Canadian dollar is going to be under some major news throughout the whole day, and then 10:30, the US dollar. I don't trade any of those. I do trade the British pound, but I'm not going to trade that today. So we're pretty much fine with that. So what we're going to do is we're going to actually trade on NAS once again. Now, what we're going to do here on NAS is we're going to actually mark up market structure and supply demand zones from the 15-minute to the 4-hour. And then we're going to go back to the 15-minute. And basically, we're going to determine our entry based off of order blocks. So that way we'll know how to trade when the banks actually make their marks. All right. So what we're going to do is we're going to actually get started here. So we're going to go all the way back to the beginning. We'll go all the way back in the beginning because, you know, past price usually gives us an idea of what future price is going to do. We may not know 100%, but we get an idea. But it also gives us an idea of exactly, you know, when the banks actually put in their buy and sell orders and why price moves the same way. So we're going to put our vertical line here. And then we're going to start marking up our market structure based off of the wicks. So we see a little wick action here. So we're going to put that there. See a little bit of wick action here. See it just a little bit up here as well. Put one up here. So then what we're going to do is we're going to draw our zones based off the body of the candle all the way up to the wick. This time we're going to make it actually purple. Right. So then what I'm going to do is just change the coordinates of these, and then I'll resume this recording. All right, so now that these zones been drawn up, I'm going to kind of move down. So then I want to mark these up, then we're going to move to the 30-minute. Some good wick action here. Probably say down in here as well. Might be a good one here. Right. All right. All right, so now what we're going to do is we're going to go ahead and switch to the 30-minute. Find where we left off. And start marking up our market structure here. So we did it all the way to the bottom here. You can see our vertical line that we drew. So now we're going to go all the way up to here. So let me say my progress here. The vertical line, I'll say right here. So last time price hit this zone. So now I'll say maybe like up here, maybe, yeah. Some wick action here. Maybe right there. Yeah, that's probably good enough. And up to here. Then, I just try to place them in the best place possible. Place them in key points where price really interacted with these horizontal lines, and then draw zones right behind them. This is probably a good spot here. And then another one at the top here. Got to change the color of these horizontal lines, but it's okay. I'll just change the colors of the zones. So I started right here. So we'll make this, let's make it light green, clearing green. Do it like that. Actually, I could probably move this one down here. That might be more appropriate. Here. All right, and so now I'm going to actually stretch out these zones here. So let me pause this recording to do that. Be right back. All right, so now that we did that on the 30-minute, see all that here, kind of left a little bit of a gap here. Maybe I should mark, I forgot to get this one. I ain't gonna worry about that gap, because then that gave me room to mark up the order blocks on the 15-minute. That's actually fine. So yeah, so now we're going to move on to the 1 hour. So we're going to start the 1 hour here. Kind of like in this area, so we're going to put a vertical line here. Notice current price is there. So that's good. So this looks like an order block area here. So this is a good place for a zone. Actually, let's do here is good. Then put another one right here. So with these zones, we're going to make this yellow. Perfect. Here. Go. Put one all the way to the top here. All right, so I'm going to change the coordinates of these. They'll be right back. All right, so I drew these up. Let's go to the 4 hour. So it looks like we drew everything up all the way on the 4 hour as well. And here's current price. So now what we're going to do is we're going to go all the way back to the 15-minute. And this is the 15-minute. Now, what we want to do is first thing we want to do is try to locate order blocks now, because order blocks is going to let us know what price the institutional banks are pushing it. Now, when I kind of look here, let me zoom on in. We see that price did trend up to a certain point. It looks like there was a break in market structure. So I'm going to draw this trend line. So we see there was a trending market, and it looks like there was actually a lot of order imbalance as well that made price go all the way up to here. So I want to bet how much I want to bet, because price broke this trend line, and now it looks like it's rejecting this resistance here. I should put a horizontal line here. Okay. So this is probably an order block up here. Price resisted this, price resisted this zone, boom, resisted again, made price push down. Then it tried to go up again, resisted, and then it resisted and went down. So this may be an order block. So let's find out. So what we're going to do is we're going to actually turn on our order block indicator to see if we were correct. Well, looks like that this proves, so we see some buy order blocks here. So this proves that price was trending up. So there's a possibility that the banks are probably going to push price up just a little bit more. So that way they can kind of gain some momentum, and then it might resist this zone and then possibly make price drop down. Here's why I say that. So I could probably move this trend line kind of like this. Well, I'm gonna move it like this. Here's why I say that. So let's look at this move here. So when it comes to the banks, when the banks buy and sell in the market, sometimes they create order imbalances. This is when price moves up very, very fast. So sometimes as a result of that, there are some orders they may have open that they're not able to close. Notice there's a lot of sell orders that was initiated, did not get initiated because price moved up so quickly. Okay. So eventually the bank's going to have to sell price down to close these sell orders, or they're going to lose billions, maybe trillions of dollars of our money in the market. How do we know this? Well, when price went up and hit this zone, it kind of sold a little bit and actually pulled back. So that way that they could actually close this sell order here, and possibly this one and even this one. And then they bought it up a little bit, bought it down to where they was able to close these orders here. And then they bought price back up, sold it again to try to make up for this impulsive move. And then they bought it up. And now they're trying to put in another buy order to actually buy up because they closed these orders. But eventually they're going to have to bring price down, maybe to the 50%, and close these orders, and then maybe bring price back up to correct it, and then close all these sell orders, and eventually price going to come back down to this zone. Okay. So that's why my theory is that they're probably going to bring price up just a little bit more up to here, wouldn't be surprised, and then sell it down. Now, reason why I say that is because price is not overbought yet. Still got a ways to go, but it could be considered overbought if it hits up into this zone here. So what I'm going to do is to prepare for this, because I'm waiting for the reverse, is let me actually zoom in. Then I'm going to try to pull this down. So what I'm going to actually do, I'm going to kind of actually erase this and make this zone a little bit thinner. Yeah, kind of like this. So now I'm thinking that price is eventually going to be overall bearish. So then zoom in first. All right. So now that way we can see price a little bit better. There we go. Looks like price is starting to reverse a little bit here, possibly. Might already be doing it. Looks like it's forming a double top too. So even here, did I see my progress? Yes, I did. Okay. So now that this uptrend already happened, I'm going to erase this trend line. So I want to say that price is overall bearish, in my personal opinion. We kind of see it maybe happening on the RSI, but price also trended a little bit up to here as well. So there were some sell orders that were left open because price trended up. So they had to bring price back down to the 50%. I believe it was off of this candle here to close these sell orders. And that's why they bought price up to correct it and then bring it back down again and create momentum to close these other orders. It's a high possibility. So what I'm going to do is just pull my fib, most recent high to most recent low. Maybe even down to this low here. So, you can see that when price rejected and then pushed back up, it actually came very close to this 50%, a little bit past it. So that's proof that they actually sold price down to close these sell orders. So they're probably going to do it again, bring it back up, maybe bring it back down a little bit further down to close these sell orders and then bring price back up. It's a high possibility. So now that we know that price is really selling down, then the key is knowing how to get in for a good entry. All right. And we kind of see we saw a sell order block here. So the key is getting in on a good entry and just getting a couple pips and getting in and getting out. This is where our Delorian EMA goes into play. Now, usually we use this indicator for when the yellow EMA crosses the red EMA. That's a sign of a sniper entry. When it crosses up and crosses down, and then when it goes up, it sells, and then that's when we buy. I'm sorry. When the yellow EMA crosses the red EMA, that's a sign of a sniper entry. So if it crosses up past the red EMA, that's a sign for a buy, and then vice versa. Now, I see the yellow EMA is actually pushing up. So what that tells me is that it's a possibility that price might actually push up a little bit up to here, maybe reverse, and then start to shoot down. Now, that kind of makes sense to me in a sense because they have to push price up to correct price and then create momentum and give price more room to actually sell down all the way down to here so they can close these previous sell orders. So they have to give price plenty of momentum and room to just boom. That's what I'm thinking. Now, that's what I'm thinking it's going to do. Now, I'm not going to, if price decides to close above and buy up, I don't think it's wise for me to buy up here. It's not enough pips to really get a good profit. If price was to go from here to here, maybe a decent profit, but not really. So I would have to wait for price to actually go up to here, then reverse and then sell down. That's going to give me more momentum to buy, to sell, and a more opportunity to make money. So, but price could easily reverse it down, and the EMA could start the curve and cross over, and that can give us another sniper entry. So we just want to actually wait and see what price is going to do, and then we make our sniper entry and get in. So when the yellow EMA is very close to crossing each other, whether they're buying or selling, that's when I take out my risk to reward tool and start setting my take profit points. But until then, we just sit on our hands and wait and see what price is going to do. That's pretty much it. I do see an order block in the line here. So that may be a sign that price is going to start selling down. So we'll just wait and see. So I'm going to pause this recording, and then if this yellow EMA starts to curve over because price is starting to sell pretty much, then we'll go ahead and sell it down. Now, it's a possibility that price could come down to here and then pull back up because it might sell on these candles here. Let me actually pull out my fib. Might do that. Let's see, from the most recent high to the most recent low. It's a possibility. Might do that. But price might actually push up and test this zone again, and then go down. Looks like a double top. So we'll probably just going to have to wait for a reverse at the top here, because price is not considered overbought yet, unless the banks just decide to, sell it down. So we'll see. We'll see. We'll just see if it comes up. It's probably going to push up and then reverse up to here. That's what I'm really thinking. And it probably might be overbought by then. So we'll see. I'll pause this recording and be right back. Yeah, I see price pushing up. So the banks might actually buy this up to drive price to where it's overbought. Maybe up until this point. And then start to sell price to really make it drop so they can cover these sell orders they missed previously. I can kind of see that. So that's probably what's going to happen. They're probably going to buy it up, but it's still resisting this zone here, which may be an order block. So, that might be the case. Let me see here. Let's see where this may be an order block here. I'm gonna just label it so we can keep that in. And it's going to let us know. There's some weak buying pressure. So you never know, price could push past it, or you could even start selling there. Because I think this is an order block. You see how price resisted it before and dropped, and then resisted before and dropped, and then pushed up and before it drops. So it's either going to start selling right away and just boom with the banker's candle, or it's going to push price up and then reject this zone here, and then possibly form a banker's candle and start to sell down. One of those two. But price is not overbought yet. So it still has some momentum to push up, but it makes sense why they would do it, for the simple fact because they want to actually create a lot of momentum. So when they sell again, it's going to drop even harder to cover all these previous orders they did before, which makes sense. So let's wait and see. Be right back. All right, so it looks like this might be a sign of a reversal. This actually looks like a fake out to me. So we kind of see equal highs here too. So there might be a sign of reversal and price going down. So now I'm just going to, if that's the case, I'm going to wait to see if the EMA starts curving this way. If so, we're going to have a cross coming very, very soon. We'll see. Be right back. All right, I'm going to give you guys a little bit more of an update. I believe price is going to buy up because it's not overbought yet. But just to be safe, I want to see it close above this zone and then maybe go up to maybe to here. Because there's still a high here. This could be an order block or resistance. So it could be risky to kind of buy up and then price all of a sudden hits this zone, fake out and shoot down. So that's what I'm going to be looking for. It could still be risky to buy up, period. But if price happens to just push up and close above this and continue going up until it's overbought, then it's a possibility we might be able to get some good pips out of that. So I might just draw a zone up here just because. And that would be my target if I was to buy up and do that, but it's very risky. Let me see here. Very risky, but it's a possibility. Let's see. Let's put my risk to reward tool here. Stop loss here. Entry here. It would be definitely be a risk to reward, a greater risk to reward trade. 200 pips, that might be a decent buy. If price can pass this, that's what I'm concerned about. We'll see, but my initial thought is price is going to come up to here, fake out, and then drop. That could be a possibility as well. Kind of like what price did previously here. See how I kind of bought up a little bit, and next thing you know, it fake out and drops. And that's why we want to be very careful, because we can get stomped out by the institutions because they know retail traders are probably going to think it's going to buy up and close up and go up. And then the banks are like, haha, we got them. And then, phew, and now you stomped. So we'll see. We'll see. It's a possibility. I'll leave this up just in case if it does do that. But if it goes up and closes down, then I'm originally selling. But honestly, I'm probably going to end up ultimately selling. It could be too risky doing it up to here. I could see the banks stomping the retail traders out with that move. So we'll see. We'll see. That's just a possibility, but we'll wait and see. But I'm going to still sell it. Let's just figure out, because even if price buys up and goes all the way up into the zone, I'm going to still sell it because it's going to come down anyway. So we'll see. Be right back. Yeah, see, price might actually be selling now. We can kind of see it on the RSI as well. So it's good we didn't buy up. Price is starting to curve as well. So I'm gonna wait for the next candle, and if the next candle closes below and the yellow EMA starts to curve more, then I'm just gonna pull out my risk to reward tool and start setting my take profit zones. Yeah, that's probably what I'm gonna start doing, because let's see. Yeah, I'm just gonna wait for the next candle. We'll see if it curves some more though. Be right back. For the record, I see price selling, honestly, in my opinion. So I'm going to go ahead and just pull up my risk to reward tool and set my take profit zones. So I'm going to put my stop loss here. Probably entry here at the EMA's cross. Might be looking for so these are risk to reward of 1. I want my first take profit to at least go to 200 pips. So I'm going to pull all the way down to here. So horizontal raise. So this could be first take profit. So let me pull out my swipe. So I'm going to pause this recording and set my take profit zones. I'll be right back. All right, so it looks like price is really going to drop. That's what I'm thinking. So I'm going to go ahead and put in my stop loss and take profit real quick here. Let me share my phone screen. So I'm going to go ahead and put in my stop loss and take profit. 1543, 4.6. Profit level is 153, 84.4. And then I'm just going to leave it in my phone. Just leave it here. And then when the EMAs cross, the EMAs start to cross. Shoot, didn't really do that. When the EMAs cross, and that's when I'm going to hit that sell. So let's see. Yep, looks like that yellow EMA is starting to curve. And we can kind of see it on the RSI here as well. So we're going to wait for the next couple of candles. But then whenever those EMAs cross, we're going to jump in. Be right back. Sorry about that, folks. My computer went down. See, it looks like price is trying to buy up. But see, it's rejecting this top up here. It's faking out. Yep, I knew that. I told you guys, looked like it was going to buy up, but I saw that fake out. It might be faking out and selling, but we'll see. Price clearly doesn't know what it wants to do right now. It's a tug of war. See, take profit. 5, 3. Yeah, it's a tug of war. Price still not ready yet. Huge indecision in the market. Pause this recording. See what price finally wants to do. So these EMAs are about to cross. I'm not going to jump in yet to the next candle closing below, because this could probably price could retrace and push back up and then let the next candle close. So I'm not going to do it yet. I'll wait for that cross, and that's what I'm going to stick to. So once we get close, once this candle starts closing to get closer, then if it closes below, then I'll probably just go ahead and pull the trigger. So be right back. So this next candle closed below, but the EMAs haven't crossed yet. Looks like it's about to. Yeah, it's getting close. It's getting close and it's pushing down. I'm gonna go ahead and just initiate the sell trade since it's close. Might be risky, but we'll see what happens. So let me share my phone screen. Just initiated the sell trade. Let's see what happens here. Looks like I made profit already. So let me modify this so I can prepare for my partial trade. I made a $250 profit. I might even aim for 300, maybe 350. We'll see how far it goes. See how far it goes. So let me share my other screen real quick and see where we're at. Yeah, think about it, just they crossed, so it's going to be going that direction. So let me pause this recording. Then once I $200 in profit, almost 300, give me that 300. That's what I want. I went ahead and took a $266 profit, so that's not bad. I want to see where we are at price. Let me share my other screen real quick. Still pushing. I want to get at least another $30 out of this. So we'll see if we can get that. But the EMA, the yellow EMA definitely crossed, so it's probably going to still sell some more. So I'm going to hold this second partial trade for a while and see if we can get something, and I'll be right back. All right, so price started retracing, but I think it's still selling. So I went ahead and closed my second partial trade at $3. So I made $269. So we won this trade. So we did a very good job on our analysis, and we knew that price was selling. So we did a very good job with this. So that's it for this trading session. I believe price is going to go down and hit our first take profit. So I'm just going to keep this drawn up so that way I can wait for the alerts to set off, because I want to see if price hits my take profit there. Actually, it hit my first take profit already right here. Wonder what made us thought the alarm was going to go off, but it didn't. Interesting. But we smashed our first take profit here. So we did good right here. So dope. All right, so that ends this session. See you in the next one. Take care. Bye.